Welcome back to our attendees. Our next speaker, Mr. Xavier Lavayssière, digital finance expert at the International Monetary Fund, IMF, speaking on today's topic, DeFi and financial institutions towards a successful collaboration. Over to you, Xavier.
Thank you, Melvin. So first, thank you for having me. It's a pleasure to be here and to participate to these conversations. The purpose of my talk is going to be to talk about the rapprochement between decentralized finance and financial institution, what we have observed. So as you said, my name is Xavier Lavayssière. I've worked before on education and research on these topics, mainly since 2016 on digital assets and mostly regulation. And I've joined the fund where we work on this and really observe closely what's happening in the ecosystem. The general idea is that we build the technical expertise in support of policy decisions. So our purpose is not to provide new technology, but just to analyze what's happening and what can be decided from a policy perspective. And we have probably a focus on emerging and developing countries and also on international arrangements. We don't care so much about one specific country, what they want to do as a choice, but like how also that unfolds more globally. In practice, we have a CBDC lab, for instance, in partnership with the World Bank, where we have a hands-on approach on different technologies on CBDCs. And we have published recently 2 papers, one on the rise of digital money, that gives an overview on the topic, and the other one focused on CBDC and cross-border payments. So the purpose of my talk today is to show how these 3 main actors, so I think that has been presented, I've seen several times today, how these actors, in my view, are getting closer one to each other. So it's not only 3 silos as it was before and 3 only competitors, but also 3 ensembles that work together. And mostly we will look at how the 2 extremes, traditional finance and decentralized finance, are getting closer. On vocabulary, just by traditional finance, I mean payment service providers, banks, all the actors of finance. Some of them are not so traditional and are quite recent, but it's just the term by which we distinguish from then crypto fintechs. Crypto fintechs, by this, I mean exchanges that are the main financial actor, but also all the middleware that was mentioned in the talk before, that facilitate transaction and custody and so on. And finally, decentralized finance, which are purely protocol working directly on the blockchain, mostly on the blockchain, while having some teams, some elements that are still functioning as a regular startup. So what are the motivation between the 3? The first is that traditional finance has several motivations to participate. One is to offer returns to their customers. So it was mentioned before, currently the yield you can have on the typical saving account is probably not satisfactory. So that's why some of actors of traditional finance want to get closer to DeFi to propose better rewards. Consumer demand, especially young consumers, are asking more for crypto and exposure to DeFi. Liquidity also, that's a more complex but interesting topic, how DeFi could be providing some liquidity to traditional financial actors. And finally, financial strategies. So that's also the fact that any existing actor wants to be on top of the latest technology trends, and so participating in DeFi is a good way to be up to date to everything that's happening at the moment. On the DeFi side, different motivations are to attract new users. So onboarding traditional finance actors on your platform is a good way to get new users. Marketing, of course, to build trust and change their image. Probably the main important factor to understand is that DeFi is an extremely competitive field. You're all aware of that, but really any major player currently in DeFi could be a challenge. And so they all have an interest in getting more legitimacy and partnerships and so on. So that explains some of the partnerships. So from the side of financial institution, what are they doing at the moment? And so I'm sure you have seen some of those informations. One, they are offering exposure to digital assets, and more specifically to DeFi. That's slowly starting, mostly via, for the moment, crypto fintechs, but it's getting closer. And so they are filing for different funds that gives exposure to crypto to facilitate payments for crypto fintechs. So that's something that has been going for the last 2-3 years. One example of that was the partnership that Visa and MasterCard offered to allow different fintechs to be able to, for you to store your digital assets and to pay in a merchant using directly your card. But also more direct partnerships. And this is a picture of an NFT platform where you can directly buy NFTs by using your Visa or MasterCard, add funds via the card. So it's a more direct partnership than going through an exchange before getting onboarded. Then you have the providing of custody solutions. So a few banks have announced that. Definitely the US is at the moment in advance in this topic. Like most US banks have been working on this kind of offers, and a few have announced it already. And then finally, the last type of element we can see is the use of stablecoin for settlements. And to me, it's quite significant because it's a shift from just offering financial exposure to what's happening in DeFi and those protocols, and starting to be using it as an underground layer and as an infrastructure yourself. And this is the case. MasterCard and Visa have announced that they would onboard that on their network. So that would mean that using your card, you would trigger a payment that might be on directly a stablecoin transfer. So that's particularly significant. On the other side, so what are DeFi projects doing to facilitate the onboarding of institutions? So first, I think an important element is the rise of institutional wallets. So it's not directly a DeFi protocol that offer it, but it's offering a direct interface for a traditional actor to interact with DeFi protocols. So here you have, for instance, a picture of Ledger, but MetaMask has a solution also. So the idea in general is that you have a user identity that is quite KYC'd. Then you keep the custody of the funds using the most advanced hardware technologies to secure the funds, the assets. And then you have governance rules that allow the different users to use the assets, so sell them or interact with the protocol. And you can monitor internally what's happening, but also from an AML perspective, what actors you are interacting with and if there are some sort of compliant. So this is definitely key in the ability of institutional investors to be able to interact with protocols. What's fascinating is once this piece of software is used by the institution, then they are fully using the public network as everyone else. So you don't have a different market. You're just participating in the same market via a trusted interface. More directly from DeFi protocol, we are seeing light compliance. So some of the protocols, as I mentioned before, have some element of centralization and some team, some interface. And they are slowly, for instance, forbidding some addresses to interact or removing the ability to interact with certain assets. So I call that light compliance. That has been the case by Uniswap recently. And I think we're going to see that more in the coming years. And then the last and probably most relevant DeFi activity toward traditional investors are the institutional DeFi platforms. So the most advanced one that's soon to be released is ARC, proposed by Aave. And the logic is to have a full KYC of users, and they are interacting in a platform that looks like the regular Aave on the main platform, but that's a separated market. So you're only interacting with a regulated entity using this the same software that is on the mainnet, so that has some elements of maturity. And also you have a limited number of assets, because for most traditional investors, it doesn't make sense to be playing with every new token. They are more interested in exposure to Ethereum, Bitcoin, and a few DeFi assets. So I think that's tailored for the specific need of those actors, but allowing them to be fully interacting with the platform. So you could imagine a combination of having an institutional wallet and then interacting with institutional DeFi platform. And I think that's what we're going to see growing in the coming years. So the main problem we have with that, so we see that there is a nice dynamic going and mutual interest and steps in that direction of getting closer to traditional finance and DeFi. The problem I see is that the way risks are managed at the moment is highly different. By that, I mean the different aspect. For instance, if we look at technology reliability, in traditional finance, you will have typically redundancy, so different servers that work together, different backups. And if you have a problem, you have those different redundancy solution. And if you have an individual problem, so a transaction that went wrong, you have always the ability to do a manual correction. On DeFi, the logic is different. Of course, you using cryptography to ensure that the process is working as intended. So you have probably more confidence that you have a resilience in general in the network. But at the same time, you have less thinking on what happens if something goes wrong, and always something goes wrong. And so you need in advance to be planning audits, have a lot of analysis on your technology before, and you have some complex situation when something goes really badly. On financial risk, you have also a very different approach. So on traditional finance, typically you would use prudential ratios and be backed by the long history of the functioning of the market to analyze what are my risks. On DeFi, it's difficult to analyze because it's more recent. So even if it's a space that's probably growing and having more activity than traditional markets, so it's probably going fast in experience also, but it's still in its infancy. So for instance, Aave has an analysis on what could go wrong in terms of the security of the funds, depending on the condition of the market around. But I'm not fully convinced that this analysis yet is fully mapped to the type of risks that investors are willing to take. So at the moment, there is some sort of asymmetry of information and a lack of research in general in this topic. You have governance risk, of course, so who controls the protocols. So in traditional finance, that would be solved by corporate law and statutes. On DeFi, you have the use of DAOs, so proposals and voting mechanisms. Supposedly, game theory analysis has been done to ensure that the protocol should not be corrupted and used for some personal advantage and so on. But same as I said before, like it's still new, it's still difficult to make sure that all the options have been considered, and we see regularly a new situation where that wasn't thought through. Then you have legal risks. So as I hinted before, on traditional finance, you would typically have a compliance department, but in DeFi, you often use the decentralization as a legal mitigation, saying we are decentralized, we are not really responsible, and so on. But I feel like it's really a question of speed because the regulators are catching up on these protocols and require them to either go more decentralized or to go a bit more compliant. And that's the two trends we see together. And even the same project are trying both strategies a bit at the same time. So to finish, where we see that going and what can we expect? So first, there is no doubt that DeFi is providing an example interesting of an open and resilient infrastructure that's beyond doubt. The model of innovation we see also, so not only the ideas, but also how new ideas emerge, how a new project emerge, and the pace it has is definitely something interesting. However, as I mentioned, so all the important risks have not either been studied or are not addressed, and definitely we have different problems. And the most relevant question for us is, will on the long term this have a significant impact on the financial needs? And by financial needs, we might talk about banks and the financial ecosystem on one side. So as I mentioned before, the liquidity needs, but also more concrete needs, so loans for SMEs and the ability to access to financial services for unbanked. So there are many important issues in finance, and there is this question: will DeFi help address those problems? That's it for me. So thank you for listening, and I'd be happy to take any questions.
Thank you, Xavier, for your presentation and time. Dear attendees, if you all have questions, please kindly forward it to me, and I will have Mr. Xavier answer it for you. Thank you, Xavier, for your time and presentation.
Thank you.
And hope to meet you in person soon, sir.
Me too.
All right.
Have a good day.
Have a nice day ahead, sir. Bye-bye. Thank you.